Former Federal Reserve Chairman Ben Bernanke making headlines this week surrounding the release of his new book, The Courage to Act, detailing his perspective on the financial crisis. He took aim at Congress in the book, blaming lawmakers for hurting the economy, particularly the 2013 shutdown. He writes, "I also felt frustrated that fiscal policymakers, far from helping the economy, appear to be actively working to hinder it." Let's talk about this, and we'll take a look back before we take a look forward and what the environment is right now. I don't know, Keith, but back in the day of 2006, 2007, you really felt that we were in a tough place for the U.S. economy, and that Bernanke and Paulson did everything that they could to actually get us out of there and save the day. But we needed fiscal policy as well.
Right. Look, it was, as we all remember, a very scary time, a very uncertain time, and not a great playbook to tell you what exactly to do. I think from a monetary policy standpoint, we believe that the Fed acted appropriately and sufficiently aggressively, and had they not, it might have been a very different story. But you're right, it's the 1-2 punch, and the question is, was the fiscal side sufficient in hindsight or not?
Jason, here's what he writes. The Fed can support overall job growth during an economic recovery, but it has no power to address the quality of education, the pace of technological innovation, and other factors that determine if the jobs are being created are good jobs and high-paying wage jobs.
You know, I think there's some reality behind his situation, but behind what he's saying. But I think the biggest piece of what we went through in 08, 09, I think, is the buildup of debt that got put in place in the early 2000s, and then the work off of that debt afterwards. It was a banking system crisis primarily. It was a debt crisis primarily, very similar to what we went through in the Great Depression. And, you know, I give the guy credit. I think the Fed's actions in the case of this time around, they did in 1 year what it took the Federal Reserve to do in basically 10 years during the Great Depression. And there's a reason that we only had basically a 1 year long, 2-quarter long sort of recession. The recovery, though, because we didn't have that big downside and wipeout, has been slow because we still have a lot of that debt in place. I think what he's alluding to is this idea that, you know, the better scenario, which you see play out when they deal with this in emerging markets, is they do a complete overhaul. They kind of wipe out the financial system, restructure the banks, restructure capital, take debt down hugely, and restart. We did a little bit of that. We didn't do all of that. And I think we're still having to repay and bring that debt load down.
Well, he's blaming Congress, Dagen, because Congress didn't, do the fiscal policies that he would have liked to see. For example, look at where we are right now with the regulatory environment. You know, it's dictating balance sheets, Dodd-Frank is. So what happened next had real implications to where we are today.
It has. It's hindered growth, and when you pile all the biggest one being the Affordable Care Act, I think, in terms of the impact on businesses, both large and small.
Definitely.
So it's a lot of that. It's a lot of inaction. It's infighting. If you're going to do fiscal stimulus, should it have been structured better? I mean, even Chuck Schumer said that we need better stimulus instead of the Affordable Care Act.
Like tax reform.
I'm curious. I see a small replay of what led us down the road to disaster.
You mean in housing?
Not in housing specifically, but people reaching for yield, people, because their interest rates are at zero, they're taking on risk, and I don't think that many people fully understand the kind of credit risk that they've taken on, and that is just beginning to come home to roost because of the collapse in emerging market debt, for example. Yeah. I worry about that, even the collapse in Puerto Rico.
Which is why everyone's pushing the Fed, or a lot of people feel like the Fed should raise rates just from a credibility standpoint to get off of zero.
Well, look, and we think they should. I mean, zero equals a crisis environment. We're not in a boom environment, but I don't think we're in a crisis environment. So I think a 25 basis point move between now and the end of the year is not inappropriate. I think it's the right thing to do. And I think it signals the economy in the U.S. is better than a zero Fed funds rate would indicate.
Would that be a disruption to markets?
I don't think so, Maria. I mean, I think the more important, we're all mesmerized by when will the Fed raise rates initially, and I get it. It's been a long time. We're all anxious to see it. But the more important question in our minds is, what is the trajectory of rate increases off the initial 25 basis points? And I think that's where people need to focus on.
I agree with Keith. I would have been actually positing this idea that the Fed should think about going in different increments, because I think they have a communication problem. The instant they do 25 basis points, the market tends to expect that over the next so many rate hike cycles. If they were to come out and say, okay, we're going to start at 10, and the market starts extrapolating that would be more in line with the path that they should probably be on,
so
and they
smaller.
want to do a smaller increment, but actually have that be the way they communicate their path, as opposed to saying, oh, 25, and we may skip a meeting here or there. That's too confusing. Do 10. That's your path until you decide otherwise. Move on.
Wow, I don't know how that would work. Such a tiny rate hike. All right.